start with that. November 2018, question number 2. So this one is for SAFINA Limited. SAFINA Limited statement of comprehensive income. Year ended the 1st of October 2018. Okay. So we start with our revenue. Then the revenue what? Revenue with that? 87, but inclusive of what? A government grant of 150. We shall separate that from the revenue and we shall report it as other incomes. The government grant, there are two methods. We shall write that, the capital and the income approach. So in this case, because it is for the recurrent expenditure for employment of staff, we shall take it as recurrent and we shall treat it as other incomes, but not the revenue, because it was not from the sales that we made on a daily basis. Remind us that? 85, 550. So the cost of sales. Okay, next. So number 1, our cost of sales. So you think we made up of what? Do you have cost of sales in the true balance? No. We started the opening, huh? Opening inventory. Opening inventory was valued at 50. We had purchases. Purchases of 1, 5, and they're dealing with manufacturing. Huh? So production cost. We get a production cost of 1, 2. And our closing inventory. Note number 8. Number 8. We had a closing of 60. But it was inclusive of what? Goods valued at 7,000. But which could now be sold at 2,000. Yeah, which one is lower? 2,000. So we shall do what? You minus 7 and we add 2. Which will give you 6,000. Huh? 60,000. Huh? So you got 65. So 60, just 60. Yeah. 60. The cost of sales? 160. Thank you. Iko. Kama ngine wanakataa.
29, 26, 90. I can change the
26. I was searching for the 60. So we add the other items. Note number 6. Let's start with note number 6 for the depreciation of equipment. Equipment. What? 50% in production.
Yeah.
And we are depreciating it over 5 years. Yeah. So the equipment, the cost was what? The true balance? 4,500. Yeah, 4,500 divided by 5. 50% is the production. Yeah?
450.
What else was being charged cost of sales? For building? But they said anything about that? They haven't, huh? So shall include it as administrative expense. Total?
Why?
Note number 6. You got note number 6?
They said it should be included in the cost of sales.
So they are saying that, let us read that, not 6. You are there? The equipment is depreciated on a straight line basis over 5 years. SAFINA estimates that the equipment is used in the business on the following basis: 50% in production. And remember, production cost is part of what? Cost of sales. Yeah, so the total depreciation, we shall apportion it 50% to the production. So it gives you that what? 3140. Remind us that 140? Get what as your gross profit? 40. And we have other income. The government grant of 150. Did we have any other?
No.
Huh? Any other income? Here too. So total?
55, 60.
560. So less admin. Searching the remaining. Remaining expense. Option number 2 for remaining. As per trade balance, 980. Then we add the depreciation on equipment. Equipment, you said is 900 by what now? So this one you divide 900, huh?
Yes.
25% will be 220, 225, huh? Is that correct, Krista? 225. And we add depreciation on building now. Building route number 4. 1.7, less land and building. Land was at a valuation of what? 1 million. So the building will be 700. Land has indefinite useful life. The building should be depreciated on the value at the start of the year and the remaining useful life of 20 years. So 700 divided by 20. 35. Then, note 3. We have intangible asset. Amortization. Amortization of intangible asset. It is being amortized over 10 years, but as at 1st November, this was reviewed and the development was being assessed as having remaining useful life of how many years? 6 years. So in the trade balance, note 3. Note number 3, intangible asset at cost replaces development that was being amortized over 10 years. As at 1st November, it was reviewed as having remaining 6 years. So we had a value of 500 trade balance. Intangible asset, divided by 6. Yes? 0.33. Note number 2. We had the research. Research and development is normally capitalized. It is an intangible asset. But it is only capitalized if it is successful. The product that you are developing, if it becomes successful, the cost should be capitalized. But when you look at bullet number 2, note 2, they are saying what? 67 on developing of a new technology. At the end of the year, the directors do not think that the development will be success. So if it's not successful, it will be expense. Yeah, research and development. Research and development of 67. There's one more, the last note.
Successful.
Yes? When successful, it is capitalized. So we shall take it as part of non-current asset if it is successful. Look at the trade balance. We had a research and development of what? For what? 470. So out of 470, we shall minus 67. So for the balance of 403, this 403 will be capitalized. This one is expensed. The last note, note 11. The directors have also discovered that a customer who owed 125 was declared what?
Bankrupt.
And that is bad debts. Total 125. When you add all those are part of the administrative expense. Get what? You getting 15? Yeah, 0.5. Yeah. Then the distribution. In the trade balance, you had what? Distribution cost is 70. I think we'll just do it directly instead of doing it as a what? Plus what? The depreciation of 220? 225, not number 6. 25% to distribution cost. And we have seen that 25% is 225. So just add it directly. Yeah. Yeah, still when we calculate it's okay. It will be 590. 595. Yeah. Then finance. Finance costs. Let's deal with that. Number 3 for the finance. We are told note number 9. We took a loan of
1 million.
on
Payable for annual equal installments.
so interest
of 10% per annum.
interest on loan. So it was 1 million. The rate is
10%.
when did we take it?
On 1st November.
Beginning of the year.
Yeah.
So it is for the whole year, which will be 100. It is 100. We paid what? 50 in the trial balance. So we have an accrual of 50. Yes.
So maybe that's where I was going.
Uh-huh.
Through.
Uh-huh.
Because it's paying semi-annually.
Uh-huh.
Then
So remember,
have-
when they talk about semi-annually, that's why they have already paid her for the first 6 months. Huh?
So if I was paid by half, I'm correct.
No.
That's what I did.
So yes, when you multiply, already they have paid this. But the other half is yet to be paid by the end of the year.
Why, you're paying what?
For trial balance. And look at the trial balance with the interest. The interest on loan of 50. Then the total profit before tax. Profit before tax. So it gives you a total. $49.7. Our tax is not number 10. The corporate tax for the previous year was settled in July. We shall pay that. And the corporate tax for the year ended at 1st October was what? 625. Just minus 625. When you look at the trial balance, we have that tax that was settled for the year. If it was settled, the double entry, we shall minus it from the bank or cash. Because already it was settled in the course of the year. That one we shall minus or we shall deduct it. But for the current year, it's 625.
And something to 7.4.
724. You have other comprehensive. Other comprehensive incomes. Started the evaluation. Evaluation of land and building. So do that as a working number 4 for the evaluation. Land was valued at row number 5, 1250, and initially it was what? 1 million. Shall have 250. Building was valued at 570, and initially we had 7 minus, it had accumulated of what? 400 plus for the year, which we got as 30. This one, 35. Okay. Already in the trial balance, they accumulated that. You have seen that? We calculated. So the reason we are using for the year, remember the previous question we have not used for the year, is because when did they do the evaluation? Look at number 5. At the end of the year. At the end of the year. So this one was at the end. We need to get the net book value at the end of the year. Will give you? 30? This is getting a negative. So this is 435. 700 minus 435. Start there. 700 minus 435. Then 570 minus that. Yeah, that way. So you get 555, huh? Yeah, so 555. What about the investment property? You know, it's number what? Not number 7. The year-end valuation of investment property was 2.5, huh? So if you have in the trial balance, you had what? Investment property 2.2. So here fair value gain. Fair value gain on investment property. Number 6. We had 2.5. And in the trial balance is 2.2. You get a gain of 300. Huh? In the total comprehensive? Total comprehensive income? That 5? So you prepare the second. Then a limited statement of financial position. as at the 1st October 2018. Started with our current assets. Started our PPD. We do that as our working number 5 here. Our PPD. We have land, which was 1250. Building, which was 570. And we had the plan, equipment. The equipment was 45, accumulated of 450, and the year was 900. Now that you have a portion, here, here, and here. Minus that, get a value of accumulated and investment property that your balance. Yeah, for the equipment. You see it? Before intangible asset. Have you seen the intangible? Yeah. 900, yeah. We had 4 divided by 5. This value is 9. We have a portion for 50, 225, and 225. See here, you have a question. Huh? 20. You have seen that around. So, total. Yes? 970. Yeah? 970. We have the intangible. Intangible asset was 500, huh?
So before we continue on the building,
Yes.
that building the same as people whenever we take the new regarding the amount
Yes.
minus 700
Uh-huh.
they accumulated
Uh-huh.
plus 400.
Okay, here. So for the building, remember he already have captured that. So this is a new value. So the 700 already was at the book value. 400 was accumulated. So this value has been used to calculate the evaluation. Because now the new value at the end the building is valued at 570. Yeah. That's why we are not minusing because already it has been captured when we are calculating the evaluation. But if it was at the beginning, if this evaluation took place at the beginning, here we should have taken 570 minus the depreciation for the year. Like the previous question. Intangible? You get what? You see 500 in the top balance? With an accumulated of? Accumulated amortization? 50. For the year we had what? With the 3 point? This one, with the 3 point, right? This one for the year. Amortization for the year. With the 3.3. And you minus? What is your value?
66.7.
Right?
66.7.
Let the research. Research and development. Research and development you had 4. And you said you made us 67. If you remember it 403. You have the investment property of it has been revalued at what? The fair value. Note number 6. 025. Note number 7. Yeah, 25. That's fair value. So total. Krista seems to be having a lot of questions. A lot. Okay? Okay. I'll give you a chance, Krista, to ask all your questions. Current assets. We have the inventory. Valued at what? 60. So remember 60. This one here, the closing that we adjusted. 60. Receivable. Right, receivable. Was valued at 3. 50 minus?
Bad days.
Bad days of 120?
Right.
5, huh? Yeah. Remaining 220? 225, huh?
Yes.
Yeah, then we had bank. Do we have cash in bank? Bank of? Is it 400? The bank?
100.
Yeah, so total? No, for the bank, it will be 400 minus, you said you paid the tax. The tax for the previous year, it was additional number 10. The corporate tax for the previous year was settled in July 2018. So in the course of the year, look at the top balance. The corporate tax was 35. So you minus that. And remaining 360.
Why doesn't tell you that it was paid through the bank?
So either they pay through the bank or cash. So we don't have cash. But the only way is bank. Because already they settled that. So when you add that, so your total assets, this one will be 6 what? 650. When you add, it is 89.7. Go to equity and liability. We had ordinary share. Our ordinary share capital was 1250. And we had share premium. Share premium of 250. And what else? Revaluation. Revaluation. So for PP, we had a balance of what? The reserve 300.
Yes.
And we had what? 345 for the year. This one. It will give you 855. And for the investment property. Investment property, we had what? 300. Then we had the retained. Retained earnings. I'm going to do that as a working. Retained earnings. Let me just fix it here, number 6. Retained earnings. So the balance brought down. This is a trial balance 1785. We add for the year, profit for the year. And we have gotten 24.7. We pay dividend of what? Dividend paid. And this is the income. Then the income of 350. Now we don't know the final, that's the income. We get what as the balance cut down. Alright, forward. And 59.7. Yeah. 159. So your total? You have the non-current liability. We have the 10% loan. Yeah, 10% bank loan of 1,000. Not current liability. Repayable. Our payables are 400. We have the accruals for tax. Our income tax. 625. And we have what else? Accrued interest, bank interest, or loan interest. Loan interest of? It was 50. Here, they accrued of 50. So total? 1075. And we add that. 888. Krista, ask your questions or clarification. Umeelewa? Ana swali or clarification? Umeelewa? Yes? 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 for the amortization?
Yeah. Useful life of 10 years.
It was 10 initially. So yeah, we have ignored because it was reviewed on 1st November. Yeah, we use the reviewed amount. Any other? Yes?
The income tax is 625
625 is on number 10. Eh? The corporate tax.
Oh.
Yeah. I've seen that, huh?
Okay.
Uh-huh. Yeah, go ahead.
Hapa kwa valuation.
Uh-huh.
Kama imekuwa hiyo regarding at the beginning of the year.
Yeah.
Calculate your evaluation ama loss.
So here now we shall only deal with 700 minus accumulated. We shall not include for the year. Yeah. Because if the evaluation has taken place in the beginning, it has yet to be depreciated for the current year. But if it is at the end, you have to minus to get the net book value at the end of the year before revaluation.
Sasa tuseme ni at the beginning of the year.
Uh-huh.
Calculate evaluation hujaeka hiyo for the year.
Uh-huh.
Kuja kufanya PPE.
So the take 570 minus half answer, 570 minus 35. And again, we shall use when calculating here to 570. Like the previous question. Flashback the previous one. Yeah, 48. 48 was at the beginning. Yeah, so we depreciated using 48. Yeah. And that's where here we took 48 minus the depreciation.